Finovate showcases cutting-edge banking and financial technology through a global conference series featuring short-form demos and thought leadership. Now, the conversation continues on the Finovate podcast.
Hello and welcome to the Finovate podcast. Joining me today, we have Seth Ross, GM of Dayforce Wallet and Consumer Services at Ceridian. Seth, thanks so much for joining me today.
Thanks, Greg. Great to be with you today.
Excellent. So to kick things off, can you give us just a quick background on yourself and sort of how you came into the role that you're at Ceridian?
Absolutely. So I am General Manager of Dayforce Wallet and Consumer Services at Ceridian. Not everyone may be familiar with Ceridian, but we are a global people platform. That means we provide software to companies to help them run payroll, benefits, workforce management, and talent acquisition. And our core promise is to make work-life better. Fundamentally, our mission is that we believe that when we empower people, we make companies more successful. I've been at Ceridian for about a year and a half. Before that, I made a career out of creating embedded financial services products for other companies to help them deliver customized experiences to their customers and workers.
Excellent. So obviously a very interesting background, a lot we could touch on. What I really wanted to explore today is around on-demand pay. I think most people in the fintech ecosystem will be at least familiar with that idea, but I know it's an area that you focus on. Can you give us a quick overview of sort of how you define on-demand pay, what that really means?
Yeah, it's pretty simple. It's really just about empowering people to access the money that they've already earned whenever they need it. Fundamentally, why should I, as a worker, provide an interest-free loan to my employer for 2 weeks while I wait for payday? On-demand pay essentially allows a worker to work a day and get paid immediately for the work they've done.
Can you talk a little bit about some of the barriers that have prevented on-demand pay from being possible? Because, when you say it like that, it seems like it's something which should have been invented a while ago. So why hasn't it been possible until recently?
If you go back like hundreds of years, people used to get paid every day for the work that they did. You'd go out to the field and you'd come back and you'd get your pay and you'd go home. It really goes back to the early days of when governments implemented payroll taxes for employers to implement, and those were complicated and there was a lot of work to do around it. And so companies had to create a batch process, and that's why we now have every 2 weeks to every 4 weeks in some places once a month, where companies calculate it and then remit their payment on that basis. And it was really driven by legacy software. You used to have these giant mainframe computers that had to crunch through tons of data to calculate everybody's taxes and benefit deductions. And now the software and the capabilities are there to do that in real time. And that's how we do it. That's kind of the unique thing about Ceridian.
I think that sounds really interesting, especially when you think back to, how it used to be before we kind of muddied it all up with, additional interventions and computers potentially, easing some part of the process, maybe not all of it. But let me just kind of take a step back and play devil's advocate here for a moment, because, when you say you can get paid, at the end of the day versus every 2 weeks, why is that a really big deal? How much of an impact can that actually make?
Well, respectfully, I think it's kind of a huge deal. There was a study last year, E&Y estimated that about $1 trillion is essentially locked in employer payroll funds waiting to be dispersed to people who've already earned those funds. That's a huge number that it's hard to actually wrap your head around it. So for me, I like to kind of measure the impact in the individual stories that we hear from our users, how people are able to just tap a button at the end of their shift and go out and buy a pair of new shoes for their kid for their basketball game and be a hero when they walk in the door from work that day. I just heard another story about an individual who was applying for a mortgage, and they needed to have a certain amount of cash in their bank account for reserve. I don't know if you've applied for a mortgage recently, but it's a common thing. You have to have a certain amount of cash in. And so this person was able to take advantage of on-demand pay to pull some funds forward so they could qualify for a better rate on their mortgage, and then got themselves a much better rate over the life of that loan, resulting in thousands of dollars of savings. So there's so many different ways that having access to your funds can make your life better, and it's really about putting control back into the hands of individuals to make those financial decisions.
No, I really love that. I love the way you explain it, because I think sometimes people who work in the fintech industry, we're sort of removed from some of the problems that people face. And you think, well, if I needed to buy a pair of shoes for my kid, I could just do that. I could put it on a credit card and then pay it off with zero interest if I paid off my balance in full at the end of the month. That is not the financial reality for everybody. And it's important to remember that there are people out there for whom, a difference of a couple of days absolutely can be massive. And the knock-on effect from having a shortfall, even for a couple of days, can be substantial in terms of the penalties and interest that you can end up paying. I want to just quickly clarify something, because you had a big number in there. You said about 1 trillion is locked up. And just to be really clear, is anybody benefiting from that money right now?
Yeah. Today, the employers are benefiting from that money. That's essentially an interest-free loan from the worker to the employer.
Yeah, I think that's a really huge piece to understand too, that right now these are large companies who are really benefiting the most from it at the expense of some of their employees. So help me understand the lasting impact here, because I think there could be a concern that this is something that could be very useful at first, but after that first transition period where you start to get paid earlier, then you essentially end up on the same treadmill, in the same position as before, struggling to hold on until your wages come in. Help me understand kind of how this can be a bigger deal, a more lasting deal than that kind of quick transitional moment.
Yeah, Greg, it's a great question. It's one we get often. And what I would just say first is, fundamentally, on-demand pay is not a replacement for learning and developing good financial habits like budgeting, saving, watching what you spend. But that said, it's a really important tool in the toolkit for a large and growing number of people. And the fact is, as you said, not everyone will just go and put something on their credit card and pay it off every month. In fact, that's not even most of our country. The fact is, expenses just don't always line up with payday. And if people are in a pinch, what are they going to do to access funds? If they're lucky, they'll use their credit card and they'll have 25% interest payment on it. If they're not so lucky, where are they going? They're going to payday lenders and they're going to pay 300% interest. Having access to on-demand pay, especially without a fee to the user, which is what we do, the way we do it with Dayforce Wallet, it's simply the most cost-effective way to meet an unexpected need when it comes up. Unless you've got like a rich uncle that you can go and borrow money from.
Right. Yeah, we all want that rich uncle.
Exactly. Taking these funds from what you've already earned is just a much healthier way to meet those needs.
Absolutely. And I think one of the pieces here too, for people who are in the fintech space who are looking at, this broader problem of how do we help people just in broad strokes better their financial futures, there is no magic bullet. It's a combination of pieces. It's about financial literacy education. It's about budgeting. But this could be a really crucial piece to get people access to their own money faster in a way that doesn't cost them anything to get access to it, in a way that they can have it in real time. And you touched on something a little bit ago that I want to come back to, because there's kind of a credit worthiness aspect to this as well. You mentioned it in the context of mortgage lending, that you have to have a certain amount of balance in your checking account to be considered for a mortgage. But can you talk about some of the other knock-on effects that come from a credit decisioning standpoint, a loan origination standpoint, where people who are able to use a system like this are able to get more access to credit?
Well, I think that's really more of a forward-looking view. We're not offering credit to these users. This is the way we do it. It's a fully compliant payroll to these users. So we're just paying them the earnings that they've made. But I do think there's a real vision of the future where we are empowering these individuals to access their payroll and employment data so that they can get more access to credit in more seamless and compelling ways to help them achieve their financial goals. And I think that's, Plaid has written a lot about this. There have been a few other, folks commenting about how payroll data is kind of the next frontier in the open banking concept of giving people access and control over this type of data so they can really use it and make it work for them. And I think that's something that's coming on the horizon.
Yeah, absolutely. Certainly, we've seen some of the alternative credit decisioning tools that have come across our stage at Finovate, who are working on how we can make these decisions more inclusive, so that we can recognize good potential credit risks. As you say, that is probably more forward-looking. So there may be opportunities there for any innovators listening to this around how you can kind of take what's possible now in this kind of environment and apply it towards other areas. I want to zoom out now. So far, we've been talking about kind of the benefits for the individual worker, which obviously are substantial, but can we zoom out a little bit and talk about a larger societal concern? I think there's a couple of questions here, because obviously, if you right now have a situation where employers are getting access to these interest-free loans, essentially, what motivates them to give those up?
Well, I think it's a great question. And it really comes down to the fundamental premise of our company. We believe that when you empower individuals, when you empower people, and you make work-life better for them, your companies do better. Your companies win in the market when you have more engaged, more successful, more actualized employees. And so that's really what we do. And we've seen it bear out. Companies that leverage our Dayforce Wallet product have seen 21% lower 90-day attrition for their employees. So, particularly keeping people engaged and working in your company. And then we've also seen a significant impact of a faster time to fill open positions. So we saw a 15% faster time to fill open positions. And right now, I'm sure I don't have to tell you, we're in unprecedented times. We've got over 10 million open jobs, but only 6 million people looking for work. And so it's an incredibly competitive market out there. So for employers to have this kind of really compelling benefit that you can offer your existing employees and prospective employees is a real game changer.
I mean, it's amazing that the results are that significant for a company to take on something like this. I mean, obviously, you're not wrong. The competition for skilled workers is certainly there. But it's amazing to me how big of a difference a solution like this can make. Do you think, does this speak to kind of the rationality of consumers, that they understand how important this is? Is this maybe, a need that they've kind of been feeling for a while? I've earned this money. I want this money. Now, finally, somebody can get it to me. Is that sort of where we're at? Or is it just...
Yeah, I think that's exactly right. And to that point, we did a survey last year, and we found that 80% of workers believe that they should have access to their earnings on demand. And what was even more compelling was it actually was right across the spectrum. You didn't have to be a lower earning hourly worker. Even people earning over $100,000 a year were saying that, yeah, I want access to my money as soon as I've earned it. And I really believe that if we look, 5 years from now, companies are just not going to be on a best places to work list if you're not offering this type of benefit, this kind of flexibility to your employees. I really do believe it's becoming table stakes.
Yeah, I mean, I think the potential benefit, and again, 80% of people saying that they want this, and it's really easy to understand why. It makes a lot of sense. It's something which sort of, you can maybe make the argument, if it's not possible, people can live with it. Once it becomes possible, once somebody starts offering it, it really does raise the bar for everybody in a way that I think is really cool. We've got a couple of minutes left, and I want to just zoom out and kind of look big picture towards the future. When you look at the next 5 or 10 years, and you sort of, the payroll of the future, does it play out in this way where we're all getting paid every day, or are there still potential barriers that we need to overcome to get there?
Yeah, I think if you look big picture at the future, I definitely think you're going to see pay happening much more frequently. I think the vision that we've laid out is more of like streaming pay, so that your pay is kind of always on. And you can imagine even that it would be going, multiple times throughout the day. And there's, I could see there's a place for blockchain technology to help facilitate some of that sort of thing as well. I also think, you look at all of the innovation that's happening around embedded financial services and how there was kind of this great unbundling and the atomization of financial services. And actually, there's a great piece by Alex Johnson. I don't know if he's ever been on your podcast, but from Cornerstone. But he's just a guy that I read all the time. And just talking about how these various pieces that have been broken up are coming back together. And I really believe that the employer, like he says, is one of these future centers of gravity that is going to be an important role in consumers' lives and is going to be an increasingly important role in delivering financial services to those individuals.
It really is interesting. And I think what's clear is that there are going to be a lot of opportunities beyond, what you're working on for people in the fintech space to really take advantage of. I think as this shifts, as people get access to more of their money earlier, it opens the door for a lot of different types of innovations, a lot of creativity. And so hopefully this is a conversation that spurs some ideas in people's heads as they think about what that might look like, what they could do with that. And there's so many different applications, whether it's, payments, whether it's credit decisioning, whether it's, blockchain applications. There really is a lot that can flow from this. So, I want to thank you for taking your time to chat with me. This has been really enlightening. And hopefully this is something that I see at my own company here in the next little bit. I can only imagine how much fun it would be to get that kind of daily paycheck. So here's hoping anyway.
Greg, great to be with you today. Let's make it happen. Let's get you your paycheck.
Yeah, that'll be our goal. We'll leave it there for now and circle back with you when it happens. Thanks.
All right. That's great.
The Finovate podcast is produced by Informa Connect in association with Provoke.fm Media. Check out Finovate.com for information on Finovate's upcoming shows and to learn how you can get involved. The discount code Finovate Podcast will save you 20% on tickets to all of our events. And you can email us at info@finovate.com for information on sponsoring, speaking, or demoing. Thanks for listening.